Hi, welcome back to the channel. Today we're going to be looking at the market, the S&P 500, Dow Jones and the Nasdaq. Before then, the US CPI rose to 8.2% in the last month of September, still the highest in 40 years. We may have peaked on inflation, however, it's still the highest in the last 40 years. Now let's look at the S&P 500. The S&P 500 is trading above 3,669, while the Dow Jones it's over 3,000 and the Nasdaq is around 1,068 something. But then, how has the market been? The market has really been turbulent the last couple of weeks. We're still in bear market, and this bear market is not looking to bottom in the near days or weeks. However, there's high chances of looming recession. The recession, it's like what you're saying, but you're afraid of it because you are looking at it. For the fact that you're looking at it means that you're technically in recession. The economy is technically in recession, and you may understand why the politicians are not accepting the fact that we're technically in recession, even though all the indices are pointing toward recession. The Fed might still increase the interest rate by 0.75 basis by the November meeting. But then you can see the market is still in bear market. The challenges of the conflict between Russia and Ukraine. Now the OPEC has cut about 2 million barrels per day. So the soaring energy price, the geopolitical tension, all these are also fundamental information around what is pointing that we just might be in recession. I mean, I'm still using the word technical because it's not official yet, but everyone will tell you that by 2023 the economy, the US economy and the UK, I mean, we have seen dollar exchange higher than the UK. We have seen pounds, becoming lesser than what the dollar amount is on the exchange rate. So all these factors, and as I'm just speaking to you now, I just heard that the Chancellor of Exchequer, Kwasi, has just been fired by Liz Truss. A lot of things are happening around the world. The talk on a tactical nuclear weapon on the Ukraine, and the NATO getting involved. So there's so many things happening. The Saudi Arabia relationship with the US. Guys, we are in tough time. We are going through, the world economy is going through uncharted territory. Let me use that word. Let's have a look at the technical chart for price action. We may be seeing a reversal pattern on the S&P 500, Dow Jones and the Nasdaq. We have seen something that actually looks like an armor, which is a reversal pattern. We may have actually bottomed, but we don't know. There's no certainty to it. But as at yesterday, 14th of October, the market actually was in negative, and the Dow Jones rose about over 800 points, which is around 2.3%, and the S&P around 2.5%, and the Nasdaq as well. So but let's have a look at the price action to guide us forward. Let's have a look. Here is a technical chart for S&P 500. This is a daily chart. As you can see, yesterday was 13th of October, and the market actually closed positive with about 2.5%. As you can see, this was the yesterday candle. It was a bullish engulfing. We can actually call it a bullish engulfing or a reversal. But then before then, this is another thing you can see that the market was, we're still in bear market, so the market was trending down. As you can see, this is a downward trend, but then there's a level of support here which we think is is holding. At present, today is 14th of October 2022. But overall, the market has been we've been in bear market for, I mean, since the beginning of the year. The market has been trending down, and this is obvious. You can see it's a downward trading downward trend. Let's have a look at it on a weekly chart. On a weekly chart, it is very uh, obvious here. Um, we have the same um, downward trend here, as you can see, and we are actually below 10 weeks and 40 weeks moving average. So currently we are trading below 10 and 40 weeks moving average. But as you can see here, this was the previous bottom in June, but this is the current bottom now that we think it's a current bottom. But this is a weekly chart, so the candle of yesterday is within this candle because it's a week. So we hope that this might just be the bottom of the market, but you never can tell. But and it's still pointing towards that we're still going further down. Let's have a look at it on a monthly chart. On a monthly chart, what we can see so far so good. The month of October has been positive, so this is a blue candle here. But overall, as you can see, it is a downward trending, and we're just above 3,000, 3,000, about 3,600 here. But yeah, so far so good. The market is it's not stable yet, but you know let's have a look at let's go back to daily charts. On a daily chart, it is very obvious. It is significant. I mean, you can see that it's a downward movement, and this is the 15-day moving average. This is, yeah, 15-day moving average, and this is a 200-day moving average. So we're trading below 15-day moving average. Let's have a look at the Nasdaq. On the Nasdaq, we also have a bullish reversal candle, which closed yesterday, which is this opposite blue candle. But overall, you can see it's a downward uh, trend. Trend here, we're still trading below 15-day moving average, and also below 200-day moving average, 50-day moving average. So it is still pointing towards that we are going down. So this we'll have a look at this on a monthly and a weekly chart to see. Let's have a look at it on a weekly chart. On the weekly chart, it still shows red because today is still the end of the week. Today is Friday, but it's still showing negative, meaning that we think this might just be the bottom because this is the lowest. It goes further down. The last bottom we had there that we thought was a bottom was in June, around June 16 or 17, but then this has gone further down, and as you can see, we are just trading down. As you can see, let's have a look at it on a monthly chart. On the monthly chart, it shows the same thing. We are trending down. We've been in bear market since the beginning of the year, but as you can see, it's not that bad as the Nasdaq. Um, it still shows you that overall, there is more of a bullishness um, on the Nasdaq. However, we hope that we bottom soon, so that the
bull market. We can see the beginning of another bull market, even though this is just my own wish or so, because it's still, if we're still uh, going going to be in a deep recession, it means that we might still see further down of we must still go further down on the Nasdaq to about 8,000. I hope we don't get there anyway. So let's have a look at the Dow Jones. Dow Jones on a daily chart. Well, the Dow Jones, as I previously said in my earlier in the video, here we have, you know, a sideways movement there, but we are still trading below 15 days and 50-day moving average, and this is the 200-day moving average. But this is an engulfing candle that closed yesterday, and as we speak, this is the daily chart. So today the market has been negative so far. The market is not closed yet, so you cannot say, because it was around over 800 points yesterday on a Dow Jones. Let's have a look at it on a weekly chart. On a weekly chart, it is very positive. The week has been positive on a Dow Jones, and this was a candle, including that of yesterday. But overall, you can still see that the trend is still downward trend, and we are still trading below 10 weeks and 40 weeks moving average on a weekly chart. Let's have a look at it on a monthly chart here. On a monthly chart, it didn't look so bad, you know. As you can see, as you can see, we're just beneath here. So I hope that on the Dow Jones we're not going below. We won't go as low as 2,800. It is possible. I mean, if we're in deep recession, it could be. But then, yeah, as you can see, we are here. We are. But then, guys, be careful to this might just be the right time to buy equities. They are fairly priced for now. If once you do your valuation, you will see that the price of equity are relatively too with the what you might get as a valuation. Depending on the method you use. But guys, do not go in all at once. Just make sure that you do dollar cost averaging.
Guys, that is the technical chart for S&P 500, Dow Jones, and the Nasdaq. This might be the right time for you to buy the stocks, to invest. It would be wise to actually buy the indices themselves. The SPY, and the QQQY. They are far more better in the sense that you are not just buying one stock. You're buying like an ETF. You're buying a bunch of it. So the moment they begin to go up, then you don't have to diversify. Those indices have been diversified already. They are balanced. So it might just be the right thing. And also, do not go all in at once. You can do dollar cost average, because it might still go further down. But on the valuation side, I mean, equity seems very relatable in price. They're not. They commiserate with what you expect on the valuation table if you do your proper valuation. Thank you for watching this channel. Thank you for subscribing. We will continue to produce content that will support your investment journey. Please call again.